You know this industry. I mean, you're talking about, the place needs to be incredibly clean. It's a lot of equipment. It's expensive to build these fabrication facilities, right? And they take multiple years. So my guess is, an Intel or pick your company, they're not going to go and build a new facility unless they can guarantee it's going to kind of pay for itself, because it only lasts, right? They only have that facility for so many years, right, before they've got to kind of revamp it.
No, that's exactly right. That's the brutality of the economics. You're building, these plants are becoming more and more expensive. You're looking at $15 billion for sort of an entry level leading edge fab now, probably way more than 20 for one that's really big, the kind of thing that Samsung or TSMC or Intel would build. And because of the rate of change and the rate of advances of technology.
Okay, guys. As you can see, I placed stop on profit for Bitcoin at 56,237 pounds. It's dollars, sorry. We have 2% in profit. All of you guys who followed our trades, well done. You made profit, and we didn't close yet. So we will see how far it will go. Maybe we will get even better profit. But at this moment, if the price will change and will go up, it means we will close with 2% in profit. Well done, guys. I'll speak to you later. Good trade. Good trade. If you would like to purchase strategy, if you would like to get the strategy, please go to companyeye.co.uk. You can get strategy. We also provide webinar for you. So you will trade Bitcoin, Forex, pairs. You can trade on margin. You can trade indices, all shares, stocks that publicly listed on any exchanges, Dow Jones or London Stock Exchange. Okay, guys, good trade, good trade. Let's move on and let's keep an eye on Bitcoin, how far it will go. Maybe we'll place our order even further to make a profit. I'll speak to you later. Stay safe. Bye-bye.
Yeah, I think you're getting towards the very important point, which we tried to make towards the end of the story, which is, yes, there's a lot of money to be had by being in this industry. Yes, there are good profit margins, but only for a very few companies, right? That's why you and I can't go out tomorrow, borrow a bit of money and decide we want to get into this business. The returns are massive, but the risks are equally massive, and only a very few companies, Intel, TSMC, and Samsung can afford to really do it at that level.
Well, Ian, Tim and I were talking beforehand. It feels like the chip industry is moving towards what the airline industry is, where you've got essentially two major players, Airbus and Boeing. Is that where we're headed? And just got about 40 seconds.
Yeah, I mean, you look at the numbers. TSMC is growing quickly. Samsung is growing pretty quickly, and they're both dominant in their areas. Intel has kind of stumbled a little bit, but they still have a lot of money and a lot of resources. So, yeah, two or three players at most at the very leading edge. That's absolutely the concentration that's happening.
Hey, just quickly, 15 seconds. Based on your reporting, is it important that the U.S. government steps up and supports? We certainly are seeing it in other countries and governments around the world. Just quickly.
Yeah, I mean, if you believe the shortages are linked to some geographical concentrations, then certainly we need plants, more plants in the US and more plants in Europe.
All right, great stuff. A must read, anything Ian King does. He's Bloomberg News U.S. Semiconductor Networking reporter Ian King, and just a really nice guy and a great reporter. It is the Bloomberg Quick Take. It's on the Bloomberg Terminal and at Bloomberg.com. Carol Masser, Tim Stanovic, here comes the chart of the day.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, just got about 29 minutes left in today's trading session. Coming up next, though, we're going to do the chart of the day with Dave Wilson, and he's going to look at something near and dear to us.
Yeah, something that has to do with ARC innovation. I'm looking forward to this one.
Me too, as well. So we'll get to that in just a moment. Me too, as well. Is it like a double confirmation?
Yeah, we'll see. We'll see. We'll have high expectations now, Dave Wilson, okay?
All right, first up, let's get to Charlie Pellet. Charlie, 29 minutes to go.
Indeed, we've got stocks higher across the board. Not just that, looking at a record right now on the Dow Jones Industrial Average, up 192, up 0.6%. S&P pushing higher right now, close to the best level of the day, up 15. Has been a volatile session. Right now, we've got the S&P up 0.4. NASDAQ, though, does remain lower, down 26 points, a drop now of 0.2%. But the NASDAQ 100 index continuing to advance, up another 0.3%. Stocks are rebounding as traders assess data showing the economy is strengthening amid worries over a pickup in inflation. Gold rallying, dollar retreating. Right now, we do have gold up $27 the ounce, up 1.5%. Silver's doing even better. Silver up now by 3.5%, $27.44 the ounce. A retreat for West Texas Intermediate crude, down 1.3%, $64.78 a barrel. As the U.S. continues to make progress in getting people vaccinated, the nation's now dealing with a surplus of shots and a shortage of arms. Across the U.S., 57% of adults have received at least one dose. President Biden hopes to hit 70% by July. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health. She was interviewed this morning on Bloomberg Surveillance.
The question is, what do we do with the other vaccines? Do we keep it for ourselves? Do we start using it on our kids? These are tough questions when we have such urgent needs across the world. Maybe now is not the time for us to be vaccinating low-risk populations. Maybe we can share some and come back and do that. We need to figure this out. I don't have all the answers, but I do think that our failure to answer these questions is what's not ending this pandemic.
The Johns Hopkins Bloomberg School of Public Health is supported by Mike Galar Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer shares down 1.2%, rough day for the group. BioNTech, the German partner of Pfizer, the ADRs, they're down 2%. AstraZeneca's ADR is down 0.7%. Moderna shares based in Cambridge, Moderna down 2%. Johnson & Johnson no higher by 0.1%. Recapping 10-year yield 1.56%. We've got S&P up by 14, up 0.4. The Dow is at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Came out on Twitter today. He's 80 years old.
Wow.
And he said he's no longer going to tour.
Oh, wow.
He'll still do recordings. He may play an occasional show, but touring at 80 years old, well, not anymore.
I guess there's a point where you just
There
say
is, but
enough, right?
one thing that we have talked about on Quick Take, a lot of these virtual shows, Dave, that have come up over the last year and a half, and there are people who think that they're going to be here to stay on the other side of the pandemic.
That's, I suppose, a possibility.
Yeah.
Of course, trying to teach the proverbial old dog new tricks may be a challenge. But in any case,
Okay.
I just figured it was worth it. And you know who's
Nice.
covered that song? There are actually a lot of people have, but
It's a great
you
song.
know. But I'm thinking of one cover in particular because you just talked to their guitarist the other day.
Oh.
You're talking about Nancy Wilson. Did she cover
I'm
it?
talking about Heart.
Yeah.
Yes. They
God.
covered Tell It Like It Is.
They cover things so well, don't they? I mean, they really do.
Yeah, absolutely.
Pretty remarkable. Okay, so let's talk
In
about
any
the chart.
case,
Yeah.
you talk about covering, you know, you look at what's been going on with Kathy Wood's flagship ARC Innovation Exchange Traded Fund. You know, we know it's taken a hit lately, down now for the 8th straight day. But, you know, what's interesting, yesterday, Liz Ann Saunders over at Charles Schwab, she's always putting up charts on Twitter as well. And she had one for this Goldman Sachs index of non-profitable technology companies. That's what they call it. And then Julian Brigden, who's the president of Macro Intelligence 2 Partners, a research firm, he came back with a chart that compared that Goldman Sachs index to Cathie Wood's ARK Innovation ETF. And the resemblance is uncanny, let's put it this way. But it's not just in the chart. I took it a step further and looked at a statistical analysis that compared, how these two things moved, the ETF shares and the index value. And it turns out, this correlation can be no higher than 1. With these two, it got all the way up to 0.98 over the last 2.5 years or so. And it's been at least 0.68 the whole time. So what you say, it's really two values tracking each other pretty darn closely. So in other words, as money-losing tech companies go, so goes Cathie Wood's flagship exchange-traded fund.
Is there overlap between that non-profitable tech sector and what's in ARKK? Do we know?
There is actually, because one of the biggest holdings is Teladoc Health.
You're right.
The telemedicine company, which is
big
money-losing.
play.
Yeah, right. And Roku, while they made money in the third and fourth quarters of last year, they've been losing money over time, and analysts are looking for them to be unprofitable in the first 3 quarters of this year as well. So, yes, there is a connection. And by the way, if you want to see this chart for yourself, folks, send me an email. I'll get it to you along with the explanation that goes with it. And everything I do going forward, the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
And I'm guessing that to some extent she might argue that she is investing in, especially when it comes to genomics and things like that. These are often biotech companies that are in early stage research and are, investing and working in R&D for the future. So I guess some of that, Dave, right, makes sense. Tesla for a long time, right, wasn't profitable or very profitable.
And you can argue, they sell emissions credits to other companies.
Right.
And one of those sources of income, Stellantis, the Fiat Chrysler Peugeot combination, said this week they're going to stop buying from them.
Right, we talked about that. That's a big one. And we were talking, what?
Amazon, of course. It's like the most famous example of a company that didn't have a profit for years.
Until it was really profitable.
Exactly.
But it's an interesting correlation, and when it gets that close, you have to sit up and take notice. So good stuff.
Yes.
Did we get your stock of the day?
Let me give it to you right now. Home Point Capital, the ticker is HMPT. It's a mortgage lender that went public in January. Let's just say things aren't going well. They had lower first quarter earnings and revenue than analysts expected. Shares are down more than 19%. They fell to a record low. You're talking about a stock that's down more than 40% from its IPO price less than 4 months ago.
You can find that stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave.
Good stuff. Dave, thank you so much. Really appreciate it. And we'll look forward to that stock of the day coming out, a little bit more on that. Let's get to world and national news. Nancy Lyons, take it away.
Thanks so much, Carol. President Biden is in Louisiana as his administration puts the pressure on Republicans to back his $2.2 trillion infrastructure plan. Republicans are pushing for a much smaller package. With the Lake Charles Bridge behind him, President Biden said he does not see infrastructure as a partisan issue.
When it comes to bridges and roads and the like, I've never seen a Republican or Democrat road. I just see roads.
Biden is not the only member of his administration making the push for infrastructure. Transportation Secretary Pete Buttigieg is in Pennsylvania today. Well, Italy is the latest country that will begin shortly to welcome foreign tourists who've been vaccinated. Bloomberg's Irv Chapman has more from Washington.
A growing number of Americans are planning vacation travel in the months ahead, travel that is, within their own country. The industry is rooting for mass vaccination worldwide. Glenn Fogel, chief executive of Booking.com, suggested in a Bloomberg interview.
International travel can only really pick up when all the vaccines are rolled out throughout the world so that people feel safe throughout the world and governments feel it's safe to let people enter their country.
Fogel pointed out that it's easy to find hotels that accept reservations with free cancellation allowed. In Washington, Irv Chapman, Bloomberg Radio.
Well, it looks like more Americans are making a permanent trip from the city to less populated communities. A new study in Census Bureau data shows people have been moving largely to smaller cities in the Sun Belt and the West during the pandemic. Most were motivated by a desire to be close to family. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week on this Thursday. Carol and Tim here. And this story by Kate Crater. She is the food editor of Pursuits here at Bloomberg. And she's talking about New York City's fancy restaurants losing some ground in the latest Michelin rankings.
There are 8 fewer star dining spots than there were pre-pandemic. That's, of course, according to Michelin.
Wow.
Yeah.
So, listen, Michelin, the restaurants, Michelin.
Well, I'm not going to pretend to say it the right way, okay?
Somebody was correcting me, like, I think it's Michelin. And I'm like, what? All right. So last year, there were 76 starred restaurants in Manhattan, Brooklyn, Queens, and the fancy Westchester suburbs north of the city. This year, there are only 68. 7 new places were added to the list, all one-star spots. So that means 15 restaurants fell off the list. By comparison, last year's guide didn't lose any net restaurants.
You know, it makes sense, given what happened in New York City. But
yeah,
and you know, Kate had a story last week, and we had her on Quick Tea to talk about it. Other cities that are emerging as areas where we are starting to see some really great food.
Washington,
Chicago, yeah. But look, yeah, it absolutely makes sense. Okay, so let's talk a little about, dig deeper into this. The effect hasn't yet been felt at the top of the dining ladder. The 3- and 2-starred restaurants stayed exactly the same. New York's 3-star landscape, we're talking Le Bernardin, Massa, Chef's Table at Brooklyn Fair, Per Se, and then 11 Madison Park, which just last week announced it was going
plant-based.
Yep.
Big time.
That's
Not
a big
budged
deal.
since the 2018 guide. Any changes to top-tiered spots was all but certain not to happen. This year's Michelin has said that places that were temporarily closed during the pandemic would retain their stars. What's interesting is several time-honored restaurants that represented decades of dining came off the list because they closed, including Al Dia, Gotham Bar and Grill, Del Posto, and the longtime Michelin honoree Babbo fell off, even though it's still open with packed sidewalk tables in its Washington Square Park locale.
I gotta eat out more. I haven't been to any of these, Carol. The Brooklyn Fair is actually kind of close to where I live.
Yeah. So listen, we know the restaurants, we know people who like to eat out, they follow these ratings and rankings.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Late day surge taking us at or near session highs right now. Record for the Dow. Move higher for the S&P. We've got NASDAQ still on the minus side, down less than 0.1%, though, narrowing its losses. Right to the numbers. We'll give you the why in a moment. With the Dow up 229 points, up 0.7%. S&P up 20, higher by 0.5. NASDAQ down 10, drop there of 0.1%. NASDAQ 100 index up 0.4%. Small cap shares, Russell 2000 narrowing its loss now to just about 0.5%. Dow Transport's up by 0.2%. Stocks rebounding. It has been a volatile day. Traders are assessing data showing the economy strengthening amid worries over a pickup in inflation. A lot of people also waiting for that jobs report tomorrow morning, 8:30 a.m. Wall Street time. Complete coverage and reaction here on Bloomberg Radio. Some of the names reporting after the closing bell today will include Peloton, a little change now, up by 0.1%. Dropbox down 1%. Roku lower now by 7.7%. Yelp is down 1.8%. Shake Shack down 1.5%. GoPro down 2.8%. All those names after the bell. 10-year yield 1.56%. Gold up 1.5%. 18.14 the ounce. West Texas Intermediate crude down 1.2%. 64.82 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about a little under 10 minutes left in today's trading session. It is time for the drive to the close. Charlie mentioned we've been bouncing around. We have been up and down on the Dow Jones Industrial Average, about a 300-point swing on it. But right now we are hovering near our highs of the session, probably a record right here on the Dow Jones Industrial Average. Let's get to it. Doug Sioka, CEO and partner at Kavar Capital Partners. They've got roughly $930 million in assets under management. Back with us on the phone from Leawood, Kansas. Doug, good to have you back here with Tim and myself. How are you?
I am great. Thank you. How are you guys?
Doing well, doing well. It feels like the world is opening up. The sun is shining here in New York City. The environment, how do you see the outlook for the equity markets right now?
You know, I mean, obviously, like you said, we hit record again today on the Dow. Could be the first up day in 5 on the NASDAQ. I mean, the rotation that began, really the end of last year, fourth quarter last year, and it's taken itself through the first 4 months of this year, has been pretty pronounced, and we think it still has some traction, right? If you think what worked last year, big growth, domestic, and what's working a lot better this year, small value, and to a lesser degree foreign. But, we've seen some significant batons handed off from some of the largest, most impactful players. And there's a lot of things that you can quote to point that out, but nothing, I think, Carol, speaks more highly to it than the fact that the equal-weighted S&P is up 600 basis points more in performance than the market cap-weighted S&P. That's pretty pronounced.
Wow, it is pretty pronounced. Which tells you then what about kind of from where we go from here?
Yeah, I think that you still have to think that, if you're concerned about, like, the value rotation having legs for the first time in I guess 2018 value outperformed, but that was the first time maybe once in the last 13 years.
Right.
We think that there's still some traction to that, only in so much as our outlook for inflation is probably a little bit more, or a little bit less transitory than what the Fed has been saying. I think that what we've seen from supply line disruption.
Okay, guys. Position closed on Bitcoin. We did it. All of you guys who follow the trade, well done. You made quite a good profit. 2% from whatever amount you decided to invest. In our case, it was £2,000. So we collected already the profit. Broker sent confirmation to us. For other people who would like to find out how come we trade like this and why we place order at specific price. You need to get a strategy, and you will find out how it works. Okay, stay safe. I'll speak to you later. Let's move on. Let's look for another trading opportunity. Okay, stay safe, guys.
Of their fortunes being elevated due to associations with COVID, right? COVID testing, COVID provisioning, COVID vaccinating. But that really overlooked the core competencies of some of the businesses. And the COVID cash flow undeniably represented a very defensive aspect of their profit cycle. But the cyclical elements we maybe and likely we hope will more than offset that secular decline. I mean, if you think about elective surgery, close to all the way back, diagnostic testing, analytical instrumentation, research invigoration, right? Hopefully one of the permanent positive offshoots of the pandemic is this reacquaintance with the fact that we have to nonstop be developing drugs, be resupplying the stockpile, being anticipatory about future pandemic threats. All that really leans heavily in favor of healthcare.
Hey, Doug, I want to go back to what you were saying about inflation. What was the specific moment or the specific data point that led you to the conclusion that inflation is going to be less transitory than the Fed thinks?
Yeah, I think when we've listened to a lot of earnings reports, Tim, and I do think being in the business we have clients all around the country, in industrial business, manufacturing business, service technology, and just hearing things anecdotally, about how difficult it has been where companies used to have commitments to meet order fulfillment 5 days after a purchase order. Now they're hopeful to have 90, and they're really difficult. They've had a difficult time in making even that timeline stick. So when you think about lumber being up 300%, when you think about steel and copper, which are certainly better known, I mean, those are the kind of things that will not work themselves out in a period of weeks and months, but it could be a period of quarters and years.
Right.
So that, to me, is not consistent with the term of transitory.
So, Doug, this goes right. Oh, okay, so that's what I was going to say. It goes back to, how do you define transitory? Is it a couple of quarters or is it a couple of years? And you're saying this is going to be a little bit longer and it's not transitory.
I think it is not transitory. I think a transitory is being maybe a quarter two event. I think this is a year or two event. I mean, go try to buy a refrigerator. Go try to buy an outbuilding on a big plot of land. Try to find an organization that will recycle your copper from an otherwise dormant manufacturing site. I mean, the timelines for meeting those expectations are so far outside of typical expectations.
So how do we react to that in your view? Do we as consumers or business consumers, do we say, I'm going to put off the purchase until the supply chain is, more in line with the demand, or do I pay more for it? And are there price wars going on for stuff?
Yeah, I'd say that's a great question. And I think it comes to the definition of purchase gratification delay, right? Is it permanent and from an impairment standpoint, or is it just put off? And I think that's sort of where the rub is, because if it's something that impairs purchase permanently, then you're not going to get that recovery. And when the supply lines are replenished, you're going to have an economy that won't have absorption, that has the prospects of something called stagflation, which would be really bad. So what the economy needs to be doing is focusing on keeping the velocity as high as it possibly can, not putting in frictional impediments that otherwise could be, whether they're politically motivated, whether they're bureaucratically motivated, whether it's border war motivated. There has to be enough lubricant in order for those products to want to be consumed when they are available to the market. Now, keep in mind, one of the things that is helpful about inflation is it invites competition. And nothing invites competition like pricing power.
Right.
You have capital costs low. You have barriers to entry low. Right? Inflation could actually assist the Fed in threading the needle, timing-wise, to get away with extracting stimulus when they do, so they could let the economy be more on a sustainable footing organically as opposed to synthetically, which we've been on now for the last 18 months.
So just very briefly, in about 30 seconds, does it change your outlook for when the Fed is going to raise interest rates, and what's your estimate for that?
Yeah, Tim, that's tough. I mean, I was reading some of Kaplan's comments from down in Dallas this morning, and he seems to be a little bit counter to what Powell is saying. Powell obviously is just a significant amount of control. I think the Texas economy is somewhat independent of what's taking place in the United States. they're seeing things that maybe aren't replicated around the country. So Powell would be a better barometer for the whole country, but it likely won't be as quickly as Kaplan thinks or as long as Powell thinks.
All right. God, certainly fun time to be alive and just kind of watching what's going on. Doug Sioka, thank you so much. Chief Executive Officer, partner at Kavar Capital Partners, roughly $930 million in assets under management. Doug joining us, as he often does, on the phone from Leawood, Kansas. Just watching these last few minutes of trading, and we've seen an uptick in those major equity averages. We're now pretty much at our highs of the session. Record on the Dow up 304 points, up 0.9%. We're also higher on both the S&P and the NASDAQ. Coming up next, we're going to be joined with our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio and TV and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Romaine Bostic, Caroline Hyde, Taylor Riggs in the studio, counting you down to the closing bell. Joining us right now to take us beyond the bell, our global simulcast in force, Carol Masser and Tim Stenovic, bringing together our Bloomberg television, radio, YouTube audiences worldwide and universe-wide. Carol, let's start off with what I guess right now could be called a rally. We came into today, it looked like stocks were heading down, and right now, as we head towards the close, we're near the highs of the day.
Romaine, I was listening to Charlie Pellet earlier. I mean, it's been a volatile session. We've seen about a 300-point swing on the Dow Jones Industrial Average. You're right. We're pretty much at our highs of the day, and I don't know whether there's just optimism over some of that economic data that we continue to pour over, Tim.
Yeah, I think so. I mean, the data today really looked good. Those weekly jobless claims coming in last week at 498,000. It was a new pandemic low. It beat the median Bloomberg estimate of 538,000. Really tees us up for tomorrow for the most recent jobs report is expected to be a big one with could be over 1 million jobs, guys.
Yeah, Tim, and I think it's funny. I mean, all jokes aside, we were just speaking with Jonathan Golub, Romaine, and what he said is this is not the moment in time in this economic cycle to be looking for places to hide. This is a classic risk-on moment. This is when you take on that risk, really lean into that, and this is sort of that upswing that we continue to see. I won't make a joke, but maybe Jonathan Golub's comments on risk-on were the buy signal.
Yeah, and let's put those jobs numbers in perspective, too. I mean, you mentioned it's at 1 million. Those numbers have actually been coming up pretty significantly. Yeah. Remember, a couple of weeks ago, the consensus estimates was around 950,000. So a lot more people are jumping on board here. As I was teasing Taylor when you look at the median here and you go above that median, you got several people, 7, 8, 9 economists right now are predicting 1 million or more. You got Jeffries right now predicting 2.1 million as we get the closing bells here in New York. You are looking at a record high on the Dow Jones Industrial Average here, 34,541. Going to take a minute for that to settle, but right now you are up 0.9%. The NASDAQ up 3 to 0.4%. The S&P 500 0.8%. The Russell 2000, which had been in the red all day long, going to finish the day flat.
Meanwhile, we got some breaking news. This time it's coming from the Federal Reserve saying asset prices may be vulnerable if risk appetite does indeed fall. We've also had Lyle Brainard coming out saying Archegos shows a limit of visibility on hedge fund risk. Potential hedge fund risks show a need for more disclosure. We've already had, of course, the SEC chairman giving evidence in terms of frothiness, in terms of retail activity. But this time it seems as though the Federal Reserve's once again signaling that, look, asset prices, they are high at these levels, Carol.
Yeah, we've heard this before, certainly from Fed officials. And what's interesting is we're going to watch futures and see if there's any pullback on that comment, because you do wonder if it happened just before maybe the close, whether or not there would have been an impact, because we ultimately ended at our highs of the day. Keep in mind the NASDAQ up the first time in 5 days, Taylor.
Well, home prices, anyone? Carol, I leave you at that. When we talk about asset prices, let's get back to these markets. Like you said, it is green on the screen for our radio audience. It is telecom. It is food, staples, banks. Those are up 1.3 to 1.4%, as those are really the leaders here. You come down to the laggards. Interesting, on our worst performers, usually it's all red. There's actually some green in there because there were only 5 subsectors that were the worst performers today. We know them very well for our radio audience. You're off anywhere from 0.1% to 1.4%, Carol. It's the auto companies, it's the chip makers, it's further troubles around some of those supply chain issues that we continue to see.
Yeah, we got a bunch of earnings we're waiting for. In the meantime, let's go to some of the day's gainers. Kellogg, let's say it out. Kellogg up about 7% in today's session, gaining amid an unexpected organic sales growth in the first quarter. Peloton, want to mention, because they're going to be reporting their earnings after the close. This is going to be very closely watched after yesterday's recall, where the stock was down about 15%. It actually gained in today's session, but Peloton, as you can see, just eking out a little bit of a gain. Regeneron also seeing demand for its COVID therapy as vaccinations drop. So this stock was also moving up about 3.4%. And Activision, that was one of the earnings we broke down yesterday, a gain of 3% in today's session on better than expected view when it comes to 2021, Tim.
Yeah, Carol, a lot of the companies that reported earnings yesterday are lower today, starting with Uber, a company down more than 8% today. Stock questions about short-term profitability, given it had to pay drivers more to get them back on the roads. And then, of course, the new regulation over worker classification. Redfin down more than 15%, Rocket Companies down more than 16%, and then Etsy down more than 14%, Taylor.
Yeah, Tim, thank you for coming to me. We're getting shares of Groupon that are crossing the wire, so let me pull those up as you bear with me. And we're getting some of the earnings. First quarter revenue looks like it does indeed beat estimates. 263.8 million versus 227.6 million, Romaine, as we await further down that income statement. But Peloton, the leader.
Peloton 3Q revenue 1.26 billion. The estimate was for 1.12 billion. That was the fiscal three-quarter number. The 3Q loss per share 3 cents. The street was looking for a loss of 20 cents. So on the top and bottom line, this is a beat here. We are, of course, looking for a little bit more clarity about the recall of those treadmills, and of course a little bit more of a forecast here. The company says that it will offer a revised full-year forecast on its earnings call. So nothing here in the statement that we can see just yet, but we may hear about that, Caroline, on the earnings call.
And that's going to be the key concern here, of course, is whether they have to pull back in terms of their full year. The revenue guidance for their full year coming from the company is 4.1 billion. The adjusted EBITDA estimates is for anything at 300 million or above. And the connected fitness subscribers, they want to see at least 2.275 million for the full year. The question is whether there'll be a brand impact, Carol, from the treadmill, whether there'll be an issue in terms of, well, forward-looking guidance sales. They were going to put a lot of marketing spend behind that tread, and they're going to have to shift gears.
Well, you do wonder about that. It's interesting. Cowen was actually out with a note today, and they said the Tread Plus represents only about 2% of hardware unit sales in their calendar for the 2021 financial model. What we want to know, though, Tim, is John Foley going to be on the call? Is he going to take questions about that recall and what it means? Because this is a company that image brand means a lot.
Yeah, and he did say earlier this week that he did regret the way that he reacted first when the company was first reported to have had issues with the Tread and Tread Plus. The company also saying, we talk shipping times for Peloton, because if we think about the pandemic and what has happened during the pandemic with Peloton, some people had to wait weeks and months to actually get one of these bikes. The company now saying that the average shipping times for its original bike are back to those pre-pandemic levels. So it does seem like it's gotten the supply chain somewhat under control, Taylor.
Yeah, Caroline, I mean, I think that you nailed it when you take a look at just some of the company statements that we're getting as we're trying to look through the press release, saying that we do see significant growth opportunities in a broad range of those international markets, though, of course, Romaine, no additional launch announcements to make at this time. We push forward to that earnings call to get more of that guidance.
Hey, you like alternative meat, don't you, Taylor?
I do.
Well,
Are
guess
you
what?
talking to me about
Beyond Meat coming out with earnings.
Didn't know where you were
and
going
apparently
with that.
Alternative Meat sending the shares down about 6% here in the aftermarket. 1Q net revenue coming in at 108 million roughly. That's slightly below what the street was looking for. The street was looking for a consensus of 113. Now, as far as the actual profitability here, they were looking for a loss. We knew there was going to be a loss. Street was looking for a loss of 21 cents. They got a loss of 42 cents. So not good. That's why you're seeing the shares move a little bit lower here. Not really seeing a forecast off the top, but at least on the basis here. And here's your forecast. 2Q net revenue. Here's your range, folks. 135 million to 150 million. That's your alternative meat.
Look at it fall after hours, down by 6%. Meanwhile, for radio, for TV listeners, we're also on the YouTube. Expedia, let's talk the reopening trade, guys. Expedia numbers, first quarter revenue, $1.25 billion, a beat versus the estimate of $1.12 billion. They're also seeing an adjusted loss per share of $2.02. The estimated loss was more than that. So clearly Expedia managing to galvanize itself as we start to want to book holidays, want to get back on planes. We're also seeing TripAdvisor coming out with a better than expected first quarter revenue of 123 million versus 119. So Carol, slowly but surely, we're seeing the reopening cracks really starting to shine a light in these stocks.
Yeah, absolutely. And what's interesting, and I'm taking a look at the stock here of these travel names in the after hours. I mean, Expedia is the one that's already up about 24%. So a lot of the optimism was already factored in when it comes to what we would possibly get from this company. All right, let me just get to Square, just crossing the Bloomberg terminal as we speak. And Square, first quarter net revenue of $3.16 billion. That's a little bit light. Wall Street was looking for a number of $3.37 billion. So we'll see how ultimately that plays out in terms of the trade here. You can see Square already down 2.3%.
Yeah, a flat year to date, but look, given what happened in 2020, Square was up 240%. So you wonder how much of what moving forward is actually baked into Square right now. The company has the leading digital wallet, but there are competitors who are creeping up on it. I want to hear any comments about cryptocurrency. Jack Dorsey loves Bitcoin, and the company has been buying crypto.
Yeah, and a lot of people not only look at that, but we really got to find out about what's going on with Cash App there. We should point out Square puts out its earnings in that weird way that really frustrates journalists, where they don't actually put out the release. You got to go click through about 20 things to find the numbers. But remember, the Cash App was a huge boost to that revenue here during the pandemic. A lot of people have flocked to that, and there's a lot of concern that that's not going to persist here in the post-COVID environment. So really want to see not only how that performed within the quarter, but more importantly, what type of forecasts they give for that as well, Taylor.
Yeah. I just want to come back to shares of Beyond Meat. I have them now down about 11%. And we've been talking a lot about some of the competition. Tyson Foods, it was earlier this week, announced that they were coming to market with a 100% vegan product. Caroline, we're getting comments from the CEO. Near term, they're trying to return to issuing some guidance. They've slowly started to see a thaw occurring within the food service domestic, a little bit more internationally. I'm going to dig through and get an understanding, perhaps maybe more clarity on why that was a big revenue miss.
And it's interesting, of course, on a day where we've been looking at the likes of Kellogg's doing so well. I mean, amid this story of inflation, they're still managing to be one of the best performers on the back of its earnings. We still are having this worried about alternative meats revenue misses. And overall, just to take a step back, this is still remains an earnings season where you really have to go above and beyond what the expectations are of the street to be able to impress him.
Yeah, I just want to end talking Square. Romain made the comment about the company coming out with different earnings, that it's sort of a different way than other companies do. We are getting some more clarity here. The company's saying that first quarter hardware revenue coming in at $29 million versus estimates of $24.3 million. We are also seeing a redhead that Square did not necessarily release earnings.
All right, a lot of earnings, folks. Just go to Bloomberg.com to catch anything that you might have missed, or continue watching on Bloomberg Radio and Bloomberg TV. That's going to do it for our cross-platform coverage on TV, radio, and also on YouTube. We'll see you again
so long, guys.
Tomorrow, same time, same place.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So you're listening to Bloomberg Business Week. We had a bunch of earnings just crossing the Bloomberg terminal. Peloton's one of the big ones. So is Beyond Meat, because we're seeing some movements in the after hours. Peloton, we did see that stock certainly rallying in the after hours. I just want to pull up the most current trade, and the stock is, well, now it's just up a hair. But I think we're going to look for some more visibility about the outlook and the impact of that recall.
Yeah, that's going to be a big one. As you mentioned, though, Carol, big picture with that company is that so much of the hardware revenue comes from bikes. Tread is relatively new to the company, as you mentioned, and even Bloomberg Intelligence says 90%. So there's an estimate there, but it's definitely the vast majority still bikes.
Yeah, Cowen was weighing in on it earlier today, because we did see Peloton shares actually higher today, talking about, the recall blow seen as limited, and really the thing that everybody's watching, in terms of potential branding risk. And that's the thing with how the company reacts is going to be certainly key in terms of how they view it going forward. Beyond Meat, though, this is going to be one that we're going to be watching certainly into tomorrow's trade, because that stock down about 6.5%. It was down about 11% earlier on. But got to keep in mind, Tyson talking about, and getting into this market, there's a lot more competition. Yeah. Beyond Meat has been, though, spending on expansion in Europe. They opened up a production plant in China. All of this stuff costs money.
It does. And you mentioned competition. Impossible Foods has revamped its product line and gotten them into more grocery stores over the last year. That's been huge for the company. Margins, prices. There's a pricing war happening between Beyond and Impossible.
Yeah, exactly. All right, this is Bloomberg Business Week right here on Bloomberg Radio. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic, and a lot of earnings right now, and certainly something we're going to continue covering and watching into the Friday trade along with the jobs report. So there'll be a lot to cover tomorrow. In the meantime, one of the stories that we've been following, we've been talking so much, Tim, about real estate, if you will. And there's an interesting story. Actually, should we just talk earnings?
Let's talk. You want to keep going with earnings? Let's do it.
Because
Where do you want to start?
well, let's go back to Beyond Meat because I think that's a big one. That first quarter net revenue, that's a big miss. 108.2 million, 113.2 million. We're seeing that stock down in the after hours. And as we were just talking about, a lot of competition. Peloton, though, we did see that stock moving a little bit higher in the after hours. And that company coming out, of course, everybody wants to know what they have to say about the recall, but they did report sales more than doubling on digital growth. So reporting record quarterly revenue and a 5-fold increase in paid digital subscriptions. So reporting those results just one day after the recall of its pricey treadmills.
Okay, so let's talk a little bit about what's going on with Peloton, and then we're going to dig into Square in just a second because we're getting to see revised numbers there.
Yep.
The Peloton subscription gross profit was $154.5 million in the third quarter. That represents 172% year-over-year growth. Subscription gross margin was 64.6%, up from 57.8% a year ago.
Yeah, I mean, listen, interesting numbers. You know, they were up more than 400% last year. It was definitely a pandemic play. We are going to look for more commentary about that recall and what they do moving forward. I think, you know, what investors want to know, probably users of the treadmill want to know, okay, like what comes next, what happens, and getting ahead of the story. You mentioned Square, first quarter net revenue, $5.06 billion, looks like a huge beat compared with 3.37. They talked about Bitcoin revenue of $3.5 billion versus an estimate of $2 billion. And see second quarter Cash App lap strong gross profit growth of 167%. This too was a company that, you know, as we go digital.
Yeah, wow, the stock is actually the big revenue beat there for Square.
All right, more to come.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Headquarters, I'm Charlie Pelota. Record day on Wall Street. Dow Jones Industrial Average up 0.9% today to 318 points, 34,548 to be clear. The S&P not at a record, but it did rally 34 points today, up 0.8. A lot of these gains really coming in the last 15 minutes of trading. Nasdaq up 50, a gain there of 0.4%. 10-year yield 1.56%. Gold up $27 the ounce, up 1.5%. West Texas Intermediate crude down 1.2%, 64.87 a barrel. Stocks rallied as data showed the U.S. economy is strengthening, overshadowed inflation worries, with investors awaiting tomorrow morning's jobs report. Lots of after-the-bell earnings reports. Peloton shares lower after hours after a third-quarter revenue beat. Hardware revenue up 140%. Subscription sales also surged. Beyond Meat lower after a net revenue miss. The plant-based meat producer reported first-quarter revenue of $108.2 million. Estimates were for $113.2 million, down by about 4%. Expedia's first-quarter revenue beat estimates, up more than 4%. AIG's first-quarter adjusted EPS came in at $1.05. Estimates there were for 95 cents. And one headline, one story from the Federal Reserve, a rising appetite for risk across a variety of asset markets is stretching valuations and creating vulnerabilities in the financial system. This according to the Federal Reserve in its semi-annual financial stability report. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. A lot going on, certainly on this Thursday, and there's a lot going on when it comes to Invitae. They just reported their quarterly update. It included a first-quarter revenue beat, a smaller loss per share than analysts forecast from the year, and also from the year before. And on Monday, the company said it agreed to buy Genosity. It's a genomics company, I hope I'm saying it correctly, offering software and lab solutions to basically enable development and deployment of complex sequencing-based tests. We are definitely talking about genomics. The company also got a big investment from a group led by SoftBank. So let's get into it. And ARK Investment Management, we talked to Kathy Wood a lot. It is the largest shareholder in Invitae, according to our Bloomberg data. So let's bring in Invitae CEO Sean George on the phone in San Francisco. Sean, good to have you here. I'm scrambling to get to you because I really want to talk about your company. How are you?
Good, and really appreciate being here. Thank you.
Well, you're welcome. You're welcome. And I have to say, we do talk to Kathy Wood, and the companies that she puts on her radar, we really like to dig a little bit deeper into them. So tell us, for those not in the know and familiar with your company, tell us exactly what you are doing in the genomic space.
Sure. So our mission as a company, we've been at it for 10 years now, investing heavily in bringing genetics and genomics squarely into mainstream medical care for billions of people around the planet. We're absolutely confident that the fundamental personalized power of genetics can impact medicine to the better for all of them, improving outcomes and lowering costs. And that's what we've been up to. And I think now that it is becoming more apparent to a lot more people just how impactful genomics can be, we're really appreciative of investors like Kathy at ARK and others. The entire top of our capitalization is full of investors who really see a significant phase change coming in healthcare, largely fueled by genomics, and we're really proud to be a leader in it.
So genomics testing, I mean, at one point, I think it was expensive. It took a while to get here. But tell us exactly what you do and the services you provide and who you provide them to.
Absolutely. So, and it's good to set a backdrop. When we started the company, a single test, which would look in the form of you and your doctor, whether it be for a disease or symptoms or of yourself or your child, whether you're starting a family, a single gene test to take a sample, run an analysis of a single gene, and return the result costs $4,000 to $5,000. A large number of genes, upwards of $25,000, $30,000. We now, through our efforts in investing in reducing the cost of that and expanding the amount of information available to clinicians and to patients, that test now is $250 for a large number of genes to assess essential information that affects 1 in 6 individuals have genetics at the core of their health condition. And so we offer that service to people, like I mentioned, who have a family history, whose children have symptoms, they themselves have symptoms. Women starting thinking of having a child. There's a variety of genetic tests and screens available to really give the best outcome, best outlook for a healthy mom, a healthy baby. And increasingly now, looking toward, as an individual ages, there's an awful lot of testing that goes on in the oncology area and cancer, both to assess an individual's risk as well as to use genomic tools to evaluate what therapy, very effective targeted therapies could be useful, perhaps much better than 10, 20 years ago therapy. And now on the cutting edge of that is the use of these genomic tools to detect whether or not that therapy is working, and if not, to find that cancer coming back as early as possible and help the oncologist make the next best step. In the future, for sure, we've got, if you take cardiovascular, cardiology, 40% of cardiovascular disease has genetics as the direct cause of it. Very little people, very small number of individuals get that information today. That's going to change here in the next few years, and we're really excited. Like I said, excited to be leading the charge.
So right now, how much of your cost equation is just the build out, new lab and production facilities? I know I think you did some news in April in North Carolina. So how much of kind of, in terms of holding you back from profitability right now is the build out?
Yeah, it's a little of both. There's the physical build out. Frankly, that's not really the majority of it.
Okay.
We are expanding. We're bursting at the seams here on the west coast of San Francisco. We're expanding, putting in 200,000 square foot production facility in North Carolina, in RTP. But the real cost of doing it kind of comes down to the sample collection and the targeting of the genome that you're interested in. And then the major driver, as more and more information is gathered over the years, is in the interpretation of that genomic information and the delivery of actionable, effective, next steps for patients and the clinicians. And that's an immense effort, and that's what we've invested the most in. It's a technology stack. It's an infrastructure, software, and tools for our experts, to medical geneticists, to deliver that information and work with the patient and their clinician on what the implication is for them, their family, and what the best next steps are.
Right, and I know a fair amount of people who have done genetic testing because of either trying to start a family and they needed to because of complications, and also people with illnesses. Sean, sit tight for a second. We're going to come back, do a little bit of news, but come back and continue our conversation with the Invitae CEO, Sean George, joining us on the phone in San Francisco. You're listening to Bloomberg Business Week. I'm Carol Massar, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And we're going to continue our conversation with Sean George. He is the CEO of Invitae, and we'll get back to that conversation. They are a genomics company and really fascinating in terms of some of the work that they're doing. So we'll get back to him in just a moment. Right now, though, back to Charlie Pellet. There was a slew of earnings after the closing bell here, Charlie.
And I do want to begin with a headline out of Amazon. It is pausing plans for Prime Day in Canada, citing COVID-19. Lots of earnings, as you mentioned, after the bell. Let us begin with Beyond Meat. Sales in the first quarter missed Wall Street expectations. The maker of plant-based meat substitutes was grappling with lingering slowdowns and closures of restaurants, stadiums, and campuses that account for a significant portion of its business. Shares of Beyond Meat after hours down right now by roughly 6%. Peloton lower by about 3% after third quarter revenue beat estimates did move from a gain to a loss as investors await the conference call. And Expedia's first quarter revenue did beat estimates after hours. Expedia, that's the travel agency, the online travel agency, shares up right now by just about 2.5%. So it was an up day on Wall Street, not just an up day, but in fact a record for the Dow Jones Industrial Average, no record on the S&P. NASDAQ moved from a loss to a gain. A lot of the action really happening in the final 30 minutes, specifically final 15 minutes of trading. S&P up 34, 42.01, a gain of 0.8%. The Dow, as I mentioned, record there, up 318, up 0.9. NASDAQ up 50, a gain there of 0.4%. NASDAQ 100 index up 0.8%. Russell 2000, a volatile day there, but the Russell 2000 index of small cap shares finished the day unchanged. 10-year yield 1.56%. Gold up 1.9%, up 1.6%, I should say, up $28 the ounce to $18.15. West Texas Intermediate crude tumbling today by 1.1%, $64.93 a barrel. So a rising appetite for risk across a variety of asset markets, stretching valuations. This according to the Federal Reserve in its semi-annual financial stability report. Well, as for the market backdrop, yes, it was an up day. Doug Sioka is CEO at Kavar Capital. He was our guest right here on Bloomberg Business Week.
The rotation that began, really the end of last year, fourth quarter last year, and it's taken itself through the first 4 months of this year, has been pretty pronounced, and we think it still has some traction, right? If you think what worked last year, big growth, domestic, and what's working a lot better this year, small value, and to a lesser degree foreign. But we've seen some significant batons handed off from some of the largest, most impactful players.
And one additional earnings report passed along. Square reporting net revenue for the first quarter that it beat the average analyst estimate. Recapping stocks higher, S&P at a record up 34, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, appreciate all of that, Charlie. Let's get back to our guest. We're talking with Invitae's CEO, Sean George, and he's on the phone in San Francisco. Sean, so we're talking about what you guys are doing. You said the bulk of some of your costs have to do with the interpretation of the data and what an immense effort that is. So when does the equation kind of change in terms of lots of demand? You guys are seeing pretty impressive top and bottom line growth, but when does it become a much more profitable business in your view?
Yeah, no, it's a fantastic question. When we genuinely see this, phase transition that's coming here in healthcare with genomics very much at the center of it as the catalyst that drives to, massive and defendable operating cash flows in the future. And the key to that is this technology infrastructure that we've been developing and a differential cost advantage to deliver a genome's worth of information to a patient and their caregivers across any disease, across any stage in life. And all the data that comes along with that and the relevant genomic information then informing on next steps, and then subsequently tracking outcomes, feeding that back into the engine and coming up with even better utilization for genomic data and even better outcomes at even lower cost. And that is a virtuous cycle that we are absolutely confident in creating a business that, call it 2 to 5 years from now, we'll be able to generate, like I said, really begin generating massive operating cash flows. it's a complete shift in the way that this information is being used today. And as a leader in it, we intend to be there.
Yeah.
We intend to continue to be, and we're certain that the industry dynamic will shift to where it's a winner take most.
Well, and you're almost a $5.9 billion market cap company. Give me an idea of how massive this industry potentially could be. And there's multiple players, to be fair, but, give us an idea of, is this something that people are born or people multiple times will need to have genetic testing be done?
So I mean, this is the key to the whole. This is the key to the whole thing: the investment thesis, what we're currently doing, how we're executing in the future. 1 in 6 individuals has a genetic indication that drives the majority of their healthcare outcomes. That is, if you want to translate that to a market, again, it pretty much, we believe, will be anybody born in a modern healthcare system. Is it 10 years from now, 15 years from now, something like that? But that's where this is going. It's about 1 to 2 billion people in those modern healthcare systems around the globe. And our feeling is that our services that we provide from cradle to grave will, instead of being today what it is, a relatively expensive single test, one test at a time based on symptoms and kind of clinician inquiry, will turn into something that looks more like an information service for a few $100s per year for that number of people. This information will be on tap and available for people before they know they need it, to clinicians before they have clearly identified the cause of symptoms or family history, and certainly increasingly using that advanced genomic technology to be able to identify who's at highest risk and detect that onset of that disease far earlier than we are today, which in any one of these conditions we all know is the key to preventing, delaying, lowering the cost of treating, and in many cases outright curing those disorders.
And to be fair, and to make sure our audience is clear, genomic is very different from genetic testing.
Well, I'm really glad you brought it up. We don't see it any differently.
Oh, you don't?
Historically, historically, genetic testing has kind of, if you think about the roots of the industry, it's been a very much genetic tests have been relegated to kind of the measure of last resort. When nothing else could sort out what was going on, an idea of an indication or a problem, the patient spurred a clinician to think, I'm going to order a genetic test, or typically a specialist. And then it was typically a pretty narrow focused test and on one gene, sometimes even one marker, one specific marker.
Right.
And now, as the technology has evolved, and certainly there's been technology involved in the generation of that information that's allowed, it's very much like it's a technology called next generation sequencing. It's kind of like Moore's Law in computing in the 70s and 80s.
Right.
That's driven then the ability to look at more and more of this information at once, which people tend to call genomics. In our view, it's all the same.
Okay.
What is the biggest risk for an individual, and what do you do about it? And that is the use of this information in healthcare.
Right. Listen, we just scratched the surface, and our producer, Paul Brett, and I were talking about this, and we knew we wanted to do 2 blocks with you, but we hope you will come back again in the future, because I feel like we want to dig even deeper so that people kind of understand even more of what you are doing, and I'd love to get an update on the business down the road. Sean George, he is the CEO of Invitae, joining us on the phone from San Francisco. Let's get back to world and national news. Over to Nancy Lyons. She's out there in the nation's capital. Hey, Nance.
Hey, Carol. President Biden is making another infrastructure pitch to Americans today. He visited a bridge in Louisiana deemed by engineers as in need of repair as he tries to push a $2.25 trillion proposal to revitalize the nation's roads, highways, and more. He says he is willing, though, to compromise.
I'm willing to hear ideas from both sides. I'm meeting with my Republican friends up in the Congress to see, number one, how much they're willing to go for, what they think are the priorities, and what compromises meet men. I'm ready to compromise.
Republicans have put together a $600 billion proposal to address roads, bridges, ports, water lines, and broadband. Senate Minority Leader Mitch McConnell says there is a real chance they could pass a bipartisan package. Well, Defense Secretary Lloyd Austin says the gradual U.S. troop withdrawal from Afghanistan is right on track. He says the Pentagon is working to ensure that the withdrawal is deliberate, orderly, and safe. The U.S. troop presence in the war-torn nation numbered around 3,000 when the withdrawal began. President Biden wants it all done by early September. Secretary of State Antony Blinken says the U.S. is ready to boost security assistance to Ukraine to counter Russia's actions along the border. Blinken met today with Ukraine's president.
Ukraine faces twin challenges: aggression from outside coming from Russia, and in effect, aggression from within, coming from corruption, oligarchs, and others.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, this definitely caught my attention reading in this morning. Joining me right now is Bloomberg News' Charlie Pellet. I'm Carol Masser, and U.S. Flyers leading a nascent travel rebound, and they're heading to the Caribbean.
And why wouldn't they head to the Caribbean?
Totally.
And I'll tell you why, because it's a beautiful place to be any time of the year. Sorry about that. Little issue there. But there you are in the Caribbean. I have no idea what that was.
Got some turntables up in that news booth of yours?
I have no idea what that
Spinning
was.
some records
but
for
I'm
us?
just thinking about there you are in the Caribbean, sitting there on your sloop or perhaps a cutter. You've got the morning crew on board your boat there in the Caribbean, the party boat. Tom Keene, John Farrell, Lisa Bromwitz, and there I am on the cruise ship, and neither one of us is jealous of the other. But this is why I mention this. People are getting ready to fly. They are heading back, and a lot of the destinations that people go to, according to aviation analytics company Cirium, people are getting to return to that part of the Caribbean.
Yeah, exactly. Mexico opened to quarantine-free air travel from the U.S. Doesn't require a negative test, though. Visitors need one to return home after trips to popular holiday spots such as Cancun. And so, listen, I think we're figuring our way home. I got to say, the Caribbean is one of my favorite places to go.
Yeah, well, I don't think anybody would disagree with you on that. And I got to tell you, I mean, prices were so low last year. Couldn't do it because of restrictions, but I was just curious. I mean, I was looking at fares. Correct me if I'm wrong. If somebody from American says I'm misquoting, I believe the fares were as low as $215 round trip. I was looking at the Ritz-Carlton in Cancun.
Oh my God!
You know, and it was like $200 a night. That was up on the swanky floor with a view of the water. I mean, it was crazy.
But in the midst of the pandemic, to go there,
right? And the point is, you couldn't go. But I mean, there were deals to be had at that time of the year.
Yeah, and I think we're all going to be watching as places reopen and offer up deals and making sure that the flights are there. I'm sure, the airlines are watching where the demand is, right, to open up more flights to get to these destinations, Charlie.
Indeed, absolutely. Bottom line, though, things are recovering, fits and starts as more and more of us get our vaccines.
Meantime, you're not getting on a plane anytime. You're going to get on a train real soon.
Exactly. Heading out to Denver, getting on a train out there, going across the Rockies.
Woohoo! All right, Charlie Pellet, thank you so much. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline now on the Bloomberg. Walmart is going to be buying telehealth provider MeMD, terms not disclosed. Shares of Walmart after hours up by roughly 0.3%. Amazon, repeating an earlier headline there, it is pausing plans for Prime Day in Canada because of COVID-19, keeping an eye on Beyond Meat sales. Beyond Meat shares after hours, they are down 5.5%. First quarter sales did miss Wall Street expectations as the maker of plant-based meat substitutes grappled with lingering slowdowns and closures of restaurants, stadiums, and campuses. Peloton shares are lower now by just about 3%. Third quarter revenue beat. Investors, however, waiting for the conference call, did move from a gain right after the earnings crossed to a loss. Investors again waiting for that conference call. Dow average hits a record ahead of tomorrow morning's jobs report. Data show the U.S. economy is strengthening. That's overshadowing inflation worries. S&P up 34, 4201 up 0.8%, so back above 4,200. The Dow up 318, up 0.9. NASDAQ, late day surge there, up 50 points. Volatile session, NASDAQ up by 0.4%. 10-year yield 1.56%. Gold up 1.6%. 18.15 the ounce. West Texas Intermediate crude down 1%. 64.95 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, he ran Best Buy as CEO for about 7 years before transitioning to the chairman position for another year. He's on the boards of J&J and Ralph Lauren. He's a senior lecturer at Harvard Business School, has been recognized as one of the top 100 CEOs in the world by Harvard Business Review and more. And today he is our guest. Hubert Joly joining us to talk about his book, The Heart of Business, Leadership Principles for the Next Era of Capitalism. He joins us on the phone in New York City. Hubert, it is so nice to have you here on Bloomberg. How are you?
I am great, and I look forward to our conversation, Carol.
Well, me too. So tell us about the book, The Heart of Business, and you do talk about the next era of capitalism in it. First of all, what is capitalism? How is it evolving?
Well, I think it needs to evolve, right? Because if we look at it, it's clear that we're facing a multifaceted crisis, right? A health crisis, economic crisis, societal crisis, systemic racism, environment, geopolitical, the all-you-can-eat menu of challenges. And so what's the definition of madness, Carol, right? It's doing the same thing and hoping for a different outcome. And I think at Best Buy, over the last 8 or 9 years, we've demonstrated there's a very powerful way to achieve extraordinary results by putting people and purpose at the heart of business. And I think that's a philosophy that is particularly relevant today, because I think we need to see businesses be a force for good. I think I've seen at Best Buy the power of unleashing human magic in support of that purpose, and the importance of embracing all stakeholders, including community and the environment, and treating profit as an outcome and not the goal. Even though, during my tenure or since I became the CEO, our share price went from $11 to now between 110 and 120. So it's a very powerful formula. It's one that's very relevant today, very needed. And I thought that in writing this book, leveraging the experience I've had, I could help others on the journey. So many of us are on this journey, right? Who doesn't want to be on that journey? And who are eager to lead from a place of purpose and with humanity. And we all know it's desirable and it's hard, and I think that's with the experience I could help.
Well, it's interesting. You talk about, your kids, you talk about the dinner table, how your children talked about how excessive consumerism, I was drawn to this in the book, excessive consumerism and waste was contributing to global warming. I have to say, no one calls me on the carpet like my 18-year-old about the impact things we are having on society or the things that I've done or she thinks I've done in my world and how it's not making it a good world. But they do think differently. They look at products differently, brands differently. What can we learn from a younger generation?
So, Carol, I have to disclose something to you. My daughter went to Barnard College, same as you.
Great school. I love that.
A great school, of course. And she, together with my son, are saying exactly the same thing. And it's a call for action, right? We need to create a future that does not exist yet, but that needs to be more sustainable. And my experience at Best Buy is that we can embrace all the dimensions, all of the stakeholders. So at Best Buy, for example, and we're not perfect, we're on this journey. We've had this recycling program, right, where you can bring all of your old electronics, and then we'll work with partners to recycle it. It's good for the customer. It's good for us because it creates traffic to our stores, and it's good for the planet. Same, we're working with vendors on the circular economy. Same at Ralph Lauren, where I'm on the board. You know, the apparel industry is a big polluter. So how can we use plastic bottles? That's what Ralph has done. Recycle plastic bottle to create the Earth polo shirt. So you see businesses that are embracing these principles. And we have a ticking time bomb. I love Bill Gates' book, right? He published in February. We have 30 years to get to net zero. And I think that if we all mobilize and stop having this excessive focus on profits, you know, we have to start with how can we create some good things in the world? How can we mobilize the human resources? People are not the problem, right? Sometimes, you know, turn around. You know, the advice I got, Carol, you know, in 2012 when I studied is cut. No, like if people are the problem. No, people are the source. They are the solution. My first week on the job, I spent it listening to frontliners. And so I think we need to think really differently, and that's what I'm calling for, is a refoundation of business and capitalism around these principles of purpose and people at the heart of business.
Yeah, there's a section in your book about cutting jobs as the last resort. That definitely jumped out for me.
Yes.
Let me ask you something, though, because, you know, how would shareholders really react, though, if you or another CEO, you know, you make profits, maybe this is the wrong word, an afterthought. I mean, it's hard as a publicly held company. I understand purpose. I understand ESG. And I do think it's becoming, you know, easier to do that financially. But if you've got to make a decision between kind of doing the quote unquote right thing versus being profitable, especially if you're public, how do you do that?
So I think it was 3 years ago, Carol, I actually told our shareholders, I was at an investor conference, I said our purpose as a company is not to make money. It's an imperative, it's an outcome, and you guys are a very important stakeholder. And by the way, you know, again, share price going from 11 to 115 or something, or 119 today. So we're going to take care of you. But the way we're going to do this is by first focusing on doing the right thing, and we're going to work hard to then create profit as an outcome. One of the things I've learned, Carol, I think it was 30 years ago when I was at McKinsey from a client of mine. He told me that 98% of the questions that are asked as either or are better answered as and. So to refuse the tyranny of or and embrace the power of and. And I think our challenge as leaders is not easy, but it's doable. That's what I've learned during my career, in particular at Best Buy, is you have to force yourself to find ways that are win-win-win. And so my view of purpose and stakeholder capitalism, this is not at the expense of shareholders. This is, in fact, how you maximize, performance for shareholders, but not at the detriment of other stakeholders. That's what I've learned.
Hey, just got about 30 seconds, so forgive me, you've got to be quick, but if leaders don't focus on purpose, and as you said, profit as an outcome, not a goal, what happens, do you think, ultimately to their companies going forward? And again, very quickly.
I think they're doomed. Employees demand it, customers demand it, society demand it. They can have short-term gains, but long-term, it's not sustainable. I firmly believe this, Carol.
Well, Hubert, I hope you come back, because I would love to dig even further into this, because it's such a relevant topic, certainly at this time, and especially after the past year that we have had. Good luck with the book. Hubert Joly, he is the former CEO of Best Buy, former chairman of Best Buy as well. His book, The Heart of Business, Leadership Principles for the Next Era of Capitalism. It is currently out. All right, that's going to do it for the Thursday edition of Bloomberg Business Week. We have seen quite a volatile day, a lot of earnings. We finished at our highs of the session, so up 0.9% on the Dow Jones Industrial Average, up 0.8% on the S&P, and up about 0.4 on the NASDAQ tomorrow. Don't forget, we've got that monthly jobs report coming your way. For the whole Business Week team, have a good evening.
the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, powerhouse Peloton, the at-home fitness company, reporting sales more than double on digital growth a day after recalling its treadmill products over safety concerns. We're going to get analyst reaction. Plus, the workplace evolution. Google now says employees can work from home from anywhere. Coinbase closing its San Francisco headquarters altogether. Redfin CEO Glenn Kelman joins us to talk about the post-pandemic working world and how it's shaping housing markets. And game on! Zynga's earnings gave a pop to shares after first quarter revenue beats. Zynga CEO Frank Chapeau joins me about the company's outlook, its chart boost acquisitions, and, oh yeah, what he thinks about the Apple Epic trial. All those stories in a moment, but first, U.S. stocks climbing on economic optimism ahead of Friday's jobs report. Our Kriti Gupta has the market picture. Kriti, take it away.
Well, Emily, it was a good day for tech across the board, but here's the thing. Big tech did not lead, and that's a pretty interesting dynamic. You're seeing this right here. The New York FANG index underperforming the S&P 500, even semiconductors, which have been dropping pretty recently. Flip up the boards, and I want to show you this trend that's kind of emerging when we're talking about tech. Remember when yields used to scare those big tech names? Now they're trading together. It's pretty interesting. For the last 4 sessions, you've seen the NASDAQ 100 and yields drop together all the way until the very end of today's session when you saw a little bit of an uptick in both. So that's going to be a trend we really want to watch. Something else we really want to watch is, of course, those earnings stories. Let's just get right to it here. You really are seeing Roku gain in after hours trading up a whopping 7%. Of course, it's coming after strong sales forecasts on that streaming growth. You also have Square reporting their revenue beating as well. Those shares seeing some love, not as much as Roku, but still in the green after hours. And then, of course, to the downside, we have Beyond Meat restaurant closures weighing on sales. That could come back in the back half of the year as we are all out and about. And lastly, Peloton, you know it had that monster drop yesterday. Still gaining today in intraday session, but it looks like in after hours, it's back in the red. Investors really waiting for what's coming next on that company. Emily?
Absolutely. Kriti Gupta, thanks so much. I want to focus on Peloton and that eye-popping 400% jump in digital subscriptions. That good news, though, as the company also wrestles with the massive recall of all of its treadmill products. I want to get analyst perspective with Camilla Yanuszewski of CFRA. So, Camilla, how do you make sense of this? Obviously, digital sales going well, but the treadmill recall just announced yesterday, not good.
Yeah, definitely not good for Peloton shares. We do think that the market needs to separate what obviously is a tragic situation, that is being the death of a child. And then they need to separate that from the underlying fundamentals of Peloton, which we think is a very innovative and disruptive company. And we think the numbers they put out today were really great.
So do you think the numbers, though, keep going up even with this treadmill problem? I mean, I realize treadmills are still a smaller part of the overall pie, but the goal was to have them be a bigger part of the pie, right?
Yeah, the tread opportunity size is twice the size of bike, but currently, majority of Peloton's revenues are bike. Nevertheless, though, we think Peloton's growth story is very much intact. And there are 3 key things we think investors should remember. First, this is not Peloton's first regulatory hurdle. Peloton has dealt with music litigation, and then they also dealt with a recall on their pedals a few years ago. And in all these situations, Peloton has come out stronger. Second, children are not Peloton's target market. So this is a very different story in terms of how this can impact demand or how this can impact reputation than, for example, a recall on toys or a recall on baby powder. And third, we think the tread is actually a very easy fix in terms of enhancing safety. Just 2 ideas I'd throw out there. They could put a bar underneath the machine or maybe even a sensor, and they could capitalize on the expertise of Atlas Wearables, which is actually a company they recently acquired.
You know, Camilla, we were talking about this a little yesterday with our Mark Gurman, who covers Peloton. You know, it's not unknown that treadmills can be dangerous. There have been accidents on all kinds of treadmills before, but Peloton is obviously such a big brand name. What is it that makes Peloton's treadmill more dangerous than other treadmills, or is it?
Yeah, absolutely. So these accidents do happen. There have been about actually 80 recalls of exercise equipment since 2000. And we think Peloton is under higher scrutiny because their brand has so much power. So they're automatically going to be in the public eye. And then also they do have a higher rate of injury versus other treadmills. And